North American markets have just closed for the day, and it was another wildly volatile session. Canada and the United States moved in opposite directions almost all day. The Dow Jones plunged more than 2.5% at one point before staging a big rally in the very last hour of trade. Canada's key index, the TSX, posted solid gains and tagged along with the Dow for a final push higher than before the close. Bay Street finished up nearly 3%. Well, what does all of that mean? Why are there ups and downs? What's going on here? Jeannie Lee is back. Jeannie, help us. What's going on?
Well, you know, at the start of the day, we were staring at the markets, weren't we, Natasha, looking to see if the euphoria of yesterday would carry through to today. Would people be buying stocks, based on the idea that, hey, maybe the worst is over? But it didn't look like that, not by a long shot. So we wanted to just take you through the day. I have 3 points of time to bring you back to. I think that board is coming up. At 9:30 in the morning, the market opened, and the Dow, which you'll remember added almost 1,100 points yesterday, opened down 337 points, and those losses escalated, and at 2:15 p.m. roughly the Dow was down 611 points, so had doubled those initial losses before suddenly, and nobody knows what happened, but the market about an hour and a half later was up almost 200 points and kept on building to this advance of 260 points today, an advance of 1%. So the whole day, we're talking about a swing, Natasha, of almost 900 points. This is after that gain of 1,100 points yesterday, which is the biggest single point gain in the Dow's history. So major extremes going on here. And in these cases, what we're seeing is, a fight, a real battle between, and they're both basically the fear of missing out, as we've been talking about. The fear, of losing more money, so people sell. And then something takes over at some point, and we certainly saw that today. The fear that, you don't want to be missing out on more money if that was going to be the bottom, or we're near the bottom of the markets. And so it seemed like both fears were at play today at different times.
Okay, interesting to see. Now, there's been a lot going on in terms of unpredictable outcomes. Mm-hmm. What are you seeing on that front? Well,
that's the thing. All of this buying and selling is based on the fact that we just don't know what's ahead. And there is a plenty to argue for lower stocks ahead, and we've been talking about those. We'll just run through those factors very quickly. The bull market, after all, is almost 10 years old, and at some point a correction has to happen. The signs of a global slowdown are building by the day with Brexit, with the fact that there's no China-US trade deal yet, and also the logarithms that are at play now. The automatic trading that happens certainly does exaggerate the extremes that we've been seeing in terms of ups and downs. And then we have a president of the United States who, for the first time, is tweeting about the markets. And the fact that he's commenting on the markets at all is extremely rare for a president. So this is another factor that adds to the uncertainty and the volatility that we're seeing. And today we saw versions of both, although we don't know exactly what and to what degree, at what point, the result is driven by those individual factors.
So we're watching all of that, but you're also looking at how the other markets fared today.
Yes, so let's run through what happened on the markets, and it really was sort of a V-shape for all of these things that we are looking at. West Texas oil was down by quite a bit earlier. It came out of that hole by quite a bit, so lower by 67 cents as opposed to much larger loss. Western Canadian Select just couldn't snap out of it, though. It's down $1.61 a barrel today. Gold was a place to hide. It was higher by about $7. Ended of the day up just $4.40. So a lot of money went to stocks instead. Look at NASDAQ. It was down, I think, at least 2 or 3%. Closed pretty flat, but positive. And the same for the S&P 500. Same pattern of steep losses replaced by that bounce back into the positive by the end of the day.
Okay, thank you, Jeannie.
You're welcome.